Hi, this is Amy Wan. I'm at the StartEngine Summit in LA, and I'm here with Marty Tate. Hi,
Hey,
Marty.
Amy. Hey, how you doing?
So, you are an attorney. What firm are you at?
So I'm with Carman, Tate, Lehnhof, Israelsen. We're a boutique securities finance firm based in Salt Lake City. We have offices in Palo Alto and Portland, Oregon as well.
Fantastic. So, the SEC and the CFTC have kind of, in some ways, they're almost going a little bit head to head. Each are coming out with their own clarification and guidance. Can you give us an up-to-date primer on the CFTC's position on security tokens or the token industry in general?
Yeah, so the CFTC has been pretty consistent, and I think there's a little bit of a turf war that's happened between regulators. You see, not only the SEC, but the IRS has a position, as well as the CFTC, and they've been pretty constant. I think since 2015, they've said virtual currencies constitute a commodity. That position's been reiterated multiple times over the past few years, and then there's been a recent court case within the last month where district court basically confirmed that ruling that virtual currencies or digital assets are commodities for CFTC purposes. Now, when that happened, I had a lot of clients call me and say, what does this mean? How does this affect us? It doesn't, and my first reaction was, well, I'm not sure. Let's figure that out, because it depends on what they're doing. But the CFTC really only cares, that really only matters, and that classification only really matters if you're engaging in some sort of derivative contract, a future contract. It doesn't relate to spot sales, which is what's happening on most exchanges. So from that aspect, you don't need to go out and worry that you're complying with the commodities rules. The other spot where it does come into effect, and this is where we've seen action by the CFTC, is if there's been fraud. And in a number of cases, in some of these lawsuits that we've seen or enforcement actions, there's been fraud by the issuer, and the CFTC says in those cases we'll come in and we can bring an action. I think that, again, there's a little bit of a turf war. I don't know how much the SEC really cares about that. I'm sure they're happy to have the help. And from the, you put that next to, juxtapose that with what Commissioner Clayton has said, which is, I have yet to see an ICO that's not a security. And we've had clients say, well, is it a security? Is it a commodity? Is it a currency? And the fact is, it could be all of those things. Or none.
So it's not mutually exclusive, right?
Correct. Yeah, you could have an offering that's done, an issuance, a token sale, and that could start off as a sale of a security. The CFTC could say, hey, there's fraud. We think it's a commodity. We're gonna investigate. And in New York, they might say, hey, that's a currency, and you need a bit license. So yeah, it's clear as mud.
I mean, this is all very much regulatory soup, and I think for smaller companies, privately held companies, startups, it can be very confusing, but also become very costly to figure out, how do I comply with all these regulations? When do I know if I'm a commodity, a security, if all these different regulators apply? What gives?
That is a great question, Amy. What does give? And we get this a lot. I have a client that's doing an offering now, and we went through this analysis, and for all intents and purposes, their token, it functions like a currency. It has value within their ecosystem. You can buy products. It's used to basically engage in commerce on their platform. It looks like a currency. The sale of that, though, could be deemed as a sale of a security. And as you can imagine, that not only creates confusion, but it creates a lot of frustration. They say, well, what laws do we have to comply with? And even if it was a currency, then we have to say, okay, well, where can you sell a currency, and what do you need to sell a currency, and what licenses? So it's insanely unclear.
So let's switch gears for a
Yes.
second and talk Reggae Pluses, right?
Okay.
There are a stack of STO-related Reggae Pluses on the SEC's table, but none have been qualified. Why, and how long is it going to take for the first one to get qualified?
I don't know. I have a few of those in the stack, and I would love for those to get through. One of the offerings that we have is almost identical to a regular preferred stock offering that we did for a REIT. The only thing that's really different is that instead of the preferred stock being Series B, it's Series T for tokens, and the company plans on tokenizing it. And you would think that would be kind of something they just look at and say, great, we've
That's
already
an easy one, yeah.
Yeah, we've approved this format. We know you guys, all the players are the same, but it's sitting on their desk. We heard earlier today, former Commissioner Cox said that I guess he's got one on the SEC's table as well, and he says it's been in there for almost a year, the better part of 2018. And if he can't, and he says we've answered all the questions, we've done everything right, and they're just afraid to approve it. I think once they do, you would think those sort of floodgates would open. I think they're just afraid to
Open the floodgates.
Open the floodgates, yeah. But I think that they'll have to at some point.
Yeah.
And once they do, I think that will be a big change in the industry. I think you'll see, in addition to these stacks that are on their table, you'll see a lot more filed because of the promise of what a tokenized equity could bring as far as liquidity.
So, we are nearing now the end of 2018. So how do you think the space is going to evolve next year in 2019? And do you have a wish for the industry in 2019?
So I would wish that there would be a little bit more guidance. I think the SEC continues just to kick the can down the road. They're trying to say, hey, let's apply this 100-year-old rule of the Howey law or the Howey test. Let's apply current securities laws. We have a 1933 Act and a 34 Act. It would be great to have a 2019 Act. We're not going to see that, but that's my wish list, I guess. I think the market will evolve in that. Like I said, I think that dam will break. The SEC will start approving some of these tokenized Reggae Plus offerings, and once that happens, I think that will become almost more of I don't want to say the norm. There'll be an adoption period, but once you actually see tokenized offerings being approved, you see secondary trading, and that's kind of the big elephant, I guess, that's eluding us, right? Is that secondary trading.
Yeah.
As soon as those ATSs or your T0s or whoever get approved, once those things start falling in place, and I was saying last year that it would be 2018, so fingers crossed 2019. I think we'll just see tremendous growth in the industry. You're already seeing a lot of private placements of tokenized offerings. Mm-hmm. You're seeing the tokenization of real assets, of real estate, of oil, of a lot of I'm working on a solar deal. So you're seeing that movement, and I think that will only grow once those floodgates open.
Fantastic. Thank you so much for joining us, Marty.
Yeah, you're welcome.
This is Amy Wan from the StartEngine Summit in LA.